Hi there everyone, welcome back to Pete's Investing. We review the weekly progress of some key share market world indices and gold, and these are updated every weekend. This week's summary, we focus on the China market and see if there's any sign of a recovery. If you want me to review an index or a commodity, put it in the comments and I'll cover it in a future video. As always, click on the subscribe button, the notification bell, and like the video to support this channel. As always, look at the playlists. That's where we document our weekly share price reviews and indice reviews. This is where this video will be posted, but also our strategies playlist. And that's where we review some simple trading strategies, the average down process, and some money management ideas. Again, we don't offer financial advice. We're simply showing an educational video series to help equip you with trading yourselves in the future. First couple of things to consider. We track and trade on the 15-minute time frame. We track and backtest revenue over drawdown requirements as a percentage to optimize our returns with less exposure. And we backtest and transact with 5 contracts per trade. To increase revenue, that is returns, we simply increase the number of contracts. But beware, this will also increase your drawdown, so ensure you factor in this with your money management strategy. So let's first go to our table of results. What's been happening since last week. Again, this is tracked over a rolling 5-month period on a 15-minute time frame, and this is our strategy entry and exit approach, as well as the average down approach we're using. Be very mindful of the margin requirements per contract. Again, we're trading 5 contracts per trade, so we're getting 5 times that for each of these as we trade these. Hence, China's got the biggest margin requirement, hence the biggest returns when they do well, but also the biggest losses when they do badly. On the opposite end of the scale, you've got gold, which has got the lowest margin requirement, so hence very low returns, but also very low risk reward ratio. Again, we're using 5 contracts across the board when trading these in our theoretical portfolio. So let's first look at the US market. And this is over the 5-month period since end of April. You can see here it's been going quite strongly, and they're all been singular trades with no average down approach. So it's been generating about $2,800 over the 5-month period, and that's reflected in this revenue column. In terms of our strategy, the way it works is, let's look at this little trade here. We entered the market there. We bought 5 contracts at 44.10. When the CCI 100 moving average 20 breaks above 0, the CCI 100 is this black jagged line, and the blue line is the moving average of that 20, moving average 20. So we enter 5 contracts at 44.10. This is our profitability chart. You can see there the price went sideways for a while, but then it appreciated up, and it reached our profit margin, and it closed out when the CCI moving average 20 broke below 0. At these points when it broke below 0, it didn't close out because our profitability target hasn't been reached yet. So you can see there it closed out with a profit. If you look at this profitability chart at 2,658, and it opened up our profitability there 2,584. So about $100 worth of trade in those few days it did between late July and early August. So again, that's our US market. It's been doing quite nicely. It hasn't averaged down at all over the last 5 months. Just as an FYI, this is our entry and exit strategy with the average down coding. So try and follow that. And that's also covered in our simple trading strategy video. Next, we'll look at China. This has been the biggest headache for us. As you can see there, it's got a profitability in a negative. So China is still on a bit of a downtrend, as you can see here, since it made a bit of a sideways recovery there in May, and then it started declining from start of June. You can see there the trend line that I've drawn. It's been bouncing off that, and it's just bounced off that again in the last couple of days. So hopefully the first sign of any recovery would be to break that trend line and and start moving in a more positive direction. But as you can see here, from late May, it entered the trade there with 5 contracts at 18,342. It added more contracts, another 5 contracts there. That's defined by that position's 10, you can see there. Add another contract there, 5 contracts. We've got now 15 at that point. Insert another 5 contracts at 15.091. So there, so you've got a total there of 20 positions or 20 contracts. So the idea is for that to break above our trend line here, and we'll be hopefully moving in a more positive direction. But you can see there the profitability has gone up slightly since adding those extra contracts and averaging down the approach we've taken. Anyway, please refer to our trading strategy videos as shown on this playlist, the strategy playlist. Let's just follow the simple trading strategy using the CCI average down approach. And just please also make sure you track and monitor your money and account balance so you don't burn yourself with too much drawdown. Okay, please feel free to subscribe, click on the notification bell and like the video, and we'll speak to you guys next week.